Then as Sreenivasan, CFO at Bajaj Finserv, to talk about how their numbers have been. Sreenivasan, hi, morning. Congratulations. Firstly, it's been a strong quarter for Bajaj Finance. However, we are seeing muted performance on the insurance business. Just walk me through how the quarter has been and what explains the muted performance of purely the insurance business.
On the life insurance side, we have done actually quite well. Our growth rate on individual rated premium has been better than the market, both private sector and the market overall. We are seeing a slight subdued performance by the policyholders in terms of the unit-linked business. However, last year itself we have changed our product mix, and for the quarter we have ended up at 60% ULIP as against 72%. So in hindsight, our strategy of diversifying our product mix seems to have worked quite well. On the non-life side, the growth has been very strong. We have grown 34.7% in this quarter. There is an element of new business strain in both the life and non-life businesses. As you do new business, the entire expenses have to be written off upfront, while the premium gets earned over time in GI and the general insurance business. Therefore, you will see that as you grow, there will be some strain on profits. However, we are not at this stage concerned about it. There are some segments of general insurance business we will be tweaking a bit on group health, on some parts of commercial vehicles, but otherwise the business is on a sound footing. Bajaj Finance, as you said, has had another very good quarter. The momentum continues to be strong, and we hope to continue that momentum going into the next quarter.
Something outside the insurance business, and this is something which we normally visit once or twice in a year. Is Bajaj Finserv committed to keep their holding percentage intact in Bajaj Finance, or as the company of as Bajaj Finance will grow, dilution will happen, your holding will come down?
As of now, we have just raised capital last year for Bajaj Finance, and our holding did come down from about 58% to 55%. As we go forward, we will be evaluating that. In the immediate future, we don't require capital in Bajaj Finance. When the time comes, if we need capital, then we will review all options, including maintaining our stake. If we have to reduce our stake, we will look at it. As of now, we are committed to keeping at least 51% in Bajaj Finance.
Also, there is a trend which could be an early trend that there is a massive slowdown in the ULIP business. Your mainstay is not the ULIP business, but you do have a presence there. Are you getting a sense that given market volatility, the ULIP business could slow down? That could have impact on your life insurance business, especially the general life, especially the non-general insurance business?
We think it will be for some time, at least for the next 2 quarters. We expect the ULIP business to be somewhat subdued. Because people are holding on, there are uncertainties, they are waiting for election results. So we think they will hold on a little bit there. However, we have a more diversified product mix, and we feel that our guaranteed products business, which is the traditional business, is doing quite well. Both our risk business as well as our guaranteed business. So we are reasonably cautiously optimistic about our performance. This quarter is very important, Q4, because that is a tax season and a lot of the life insurance business gets done in this quarter. So we'll have to see how it pans out. But I think our product mix is poised for sustainability.
Let's talk about Bajaj Finance. What led to the strong growth in the business despite a tough liquidity environment? And is over 40% AUM growth sustainable? Is this a large part of market share migration in the wake of some of the players finding it hard to sustain?
No, if you look at the post-ILFS event unfolding, the crisis that developed, it was largely affecting companies which have a long-tail liability book, particularly housing finance and infrastructure companies. So in our book, the housing finance is only about 30%. 70% is consumer business, rural business, SME and commercial business. So clearly there has been a segregation between the stronger players and the weaker players in the market, or the people who have more difficulty in accessing the funds. But in Bajaj Finance, we are well capitalized. We have a very strong ALM position. A lot of inflows are short term. We do a lot of consumer business which is less than 1 year. So to that extent, we are less affected by this crisis. We also keep an internal liquidity book which varies from 4 to 7%. Depending on the market, we keep adjusting the amount. This is a voluntary thing we do, not required by regulation. We have diversified our liability book by taking deposits, which today stand at 14% of our liability book. So we are looking at all options to diversify liability book. We have been looking at it for the last few years, and we think that will help us ride over such liquidity squeezes when they happen. Typically they have happened in 2013, now 2018, so one could say it is a 5-year event, and the momentum continues to be strong on growth. We do not think it is pure market share migration. It is more because of the value of the products that give, the diverse product suite that we have. We have products for almost every segment of the customers that we want to attract, and backed by strong service and ease of buying. So I think that is what is holding Bajaj Finance in terms of its momentum.
It's very encouraging to see what Bajaj Finance has done. I've been a long-term fan of the kind of franchise what Sanjeev Bajaj and Rajiv are able to run. Your team's done a great job. But at what point in time the base effect will start hitting you? When the industry is growing, you can grow higher than the industry growth rate. But when the industry is not growing, you can only gain because of market share gain. And that market share gain cannot be infinite.
Yeah, I get your point. See, we have built Bajaj Finance as a diversified NBFC. This is probably the most diversified NBFC available in India today. And our target segment is clearly the mass affluent and above customer. We are still a very small proportion of the lending system overall. We are probably less than 1–1.5%. There is significant opportunity for growth. It is only because of our differentiated product offering, our strong customer connect, and the ease of buying that we continuously invest in, supported by deep investments in technology and analytics, that is holding us. We think there is enough market available. As long as we can hold the risk, we expect we should be able to grow all our segments.
Mr. Sreenivasan, perhaps you would be best to answer that, because now that earnings season are on, we are seeing that a large part of corporate India is actually, grappling with the demand slowdown, and especially in the auto segment. If we look at the numbers coming in from two-wheelers, three-wheelers, they're all seeing a demand slowdown and perhaps a year low in terms of volume growth. Considering you have a better handle at this, what is it that you foresee as a demand scenario for two-wheelers, three-wheelers, or for that matter even your lab book going forward, say 1 year hence?
It's very difficult to predict what will happen 1 year from now. But my feeling is there is a lot of uncertainty externally, primarily because of the elections. We had the state elections, now we'll have the national elections. So till such time, we think this uncertainty may continue and there will be a little bit of volatility. 1 odd months you will see growth and degrowth. But I think by second half of next year, we should see growth coming back, because that's our expectation. As far as Bajaj Finance is concerned, we are into white goods, we are into digital, we are into lifestyle, we are into home improvements, we are even into life care, which is support for medical expenses through 0% finance. And all these we do not think are affected as of now. We do not expect those to be affected by any slowdown in the auto segment. There could be some effect on our general insurance business, because it is almost 40–45% of the market is motor insurance. To that extent, there will be some amount of slowdown. But again, we have growing portfolios in health insurance. Property portfolio is doing well. So overall, we think there is enough diversification available for us to grow, even if 1 or 2 segments are not growing well.
A couple of quarters ago, every time when we would interact with your top team, every second question was centered around what is happening to Allianz stake. We would ask a question and the answer was always can't comment, we don't know, this is market sensitive. We've not revisited that buzz at all. I mean, can I safely say that, look, it's a happy partnership?
Yes, the partnership is very happy. We are in very close touch with Allianz. As of now, Allianz has not decided to allocate capital to India. They do have a right to go up to 49, but they have not exercised that option. The ball is in their court. They have had reviews globally. They have a life business which has been affected by Solvency II. Guaranteed products globally are getting affected because of lower interest rates. So it's clearly Allianz's call. And they are probably biding their time. So we are in touch with them. As of now, they have not taken a call. The partnership continues to be very strong, very happy, and our companies are doing very well.
Induce capital whenever they want, even at this level, because the stock is not at 2,000, it is at 6,000 plus. So obviously the capital requirement will come at a cost, at an expanded price to book. If you need capital, will they come in and induce?
That I cannot comment on that because Allianz would be able to comment on that.
They are partners.
They are partners, yes. I think globally, I think Allianz's view is that markets are hot. That's what we have read and we have heard from them as well.
All right, Mr. Sreenivasan, we leave it at that. Thanks very much for taking out the time and giving us more insights and details into your earnings. Congratulations and all the best for the future.
Thank you very much. Thanks a lot.